This is WealthBT, a podcast of BT correspondents.
Some big changes are coming to your MediShield Life and integrated shield plans this year. After last year's MediShield Life review, there will be better coverage in some areas, but also higher deductibles and premiums. All these big changes are kicking in progressively this year. But the biggest change that will impact integrated shield plans, or IPs, is that pro-ration factors are being reduced. What exactly is pro-ration? How will it impact your shield plan's benefits and premiums? Welcome to WealthBT, a podcast by BT correspondents. I'm your host, Genevieve Cua, Wealth Editor of the Business Times. Every week, my colleagues and I break down a business story that matters. Now, let's imagine you're admitted into a hospital. When the bill comes, the first layer is paid by MediShield Life, and then most of the balance is covered by your IP and rider, if you have one. The lower the pro-ration factor, the lower the amount that MediShield Life will pay out for a claim. As a result, your IP has to bear a bigger share of the bill. That's just one example. Today, I have with me Alex Lee, President of the Singapore Actuarial Society, who will help us break down what this all means for us. Thank you for joining us, Alex, and welcome to WealthBT.
Thanks for having me.
So let's get into it. Pro-ration is a feature in our health insurance plans, both for MediShield Life and IPs. Please help us to understand, what is pro-ration and why is it necessary?
Let's start with MediShield Life. We know that premiums for MediShield Life is packed to the bills typical for B2 and C wards at restructured hospital. Now imagine someone sought treatment at private hospitals and tried to claim under MediShield Life. If this bill is processed by MediShield Life as is, this patient would receive a bigger claims payout, more than the amount claimable if the patient were to seek treatment from B2 or C wards. And insurance is about risk pooling. So such higher payout for private hospital stays would feed back into how premiums and benefit limits are set in future years. Over time, this becomes unfair to the policyholders who just want to pay for premiums corresponding to B2 and C wards. And the B2 C wards users end up cross-subsidizing those who use the higher ward class, which runs against the usual social redistribution policies or logic. And that's where the pro-ration factor comes in. In the scenario above, the private hospital bill will first be scaled down to the level that's typical of B2 and C wards before other limits are applied. This will help to keep MediShield Life plans true to its original intent. And it is not just MediShield Life that needs pro-ration. When it comes to IP, the plans that are targeted for A wards also need pro-ration factor to scale the private hospital bills back to a level that's typically seen in A wards. And without pro-ration, it would become unfair to those policyholders who bought the A plan, expecting to pay a premium that corresponds to the A ward kind of charges. Every year, less than 20% of policyholders consume hospital services. When pro-ration is not properly calibrated, the over 80% of policyholders who are not claiming but dutifully paying their premiums who suffer from excessive premium increases.
So let's get into the MediShield Life review. They recommended to reduce the pro-ration factors. You've explained that it's a mechanism to recalibrate. But why now?
Okay, now MediShield review is done on approximately a 5-year cycle. The last two announcements before last year's adjustment was 2014 and 2020. So I believe that the MediShield pro-ration factor changes last year is just part of a necessary routine maintenance exercise. And personally, I like the direction that MWH is adjusting this. For IPs, because they sit on top of MediShield Life and not many people actually know that. So the adjustment will also tend to be lumpy. But that's an additional complication because unlike MediShield Life, which is compulsory, IPs are more sold than bought. And sales-related KPIs tend to weigh quite heavily within insurance companies. Insurers often delay making adjustments that are necessary to keep the risk pool sustainable for the fear that it would upset the morale of the sales force. That's why every time when they really have no choice but to make an adjustment, it usually is in quite a large, shocking step. I would suspect that the IP insurers would have suffered fairly material loss on their IP business last year. So that would have forced their hand to make adjustment now.
So recently, we had the case of Great Eastern, for example, who applied a change in their pro-ration internally between their classes of plans.
Correct.
And some people may feel that this is unfair. What are your thoughts on this?
So I always like this phrase, fairness is in the eyes of the beholder. We judge what is fair or not fair based on our own perspective and circumstances. Imagine you were told this. My company offers the most generous pro-ration factor. So when you buy a Class A plan and go to private hospital, your bill is only scaled down by 20%. But you would save 50% in premium if you were to buy the A plan instead of the private plan. And all this may be factually correct at the point of sale, so there's no breach of the law. And to that policyholder, it's tempting to take up the Class A plan because it sounds like a good deal. But if the policyholder buys into the plan with this expectation, naturally, when the insurer makes the correction in the pro-ration factor, it would feel unfair. And that is totally understandable. But also consider it from the perspective of another group of policyholders who bought the Class A plan expecting the premium to reflect the charges in Class A wards. So when the pro-ration factors are out of sync with the actual bill differentials, these policyholders are generally not aware that the premium hikes that they are quite unhappy about is actually contributed by a poorly calibrated pro-ration factor. So they can't even begin voicing their unhappiness about this. So now you have two groups of policyholders who entered the risk pool with different expectations.
Right.
Whether you update the pro-ration factor or not, you're bound to upset one of the groups. So there's no easy solution to that. And I think there are two hard truths that people should really hear about. First is IPs are essentially one-year contracts where the terms and conditions can change from time to time. So if you intend to go to private hospital, please get a private plan. Overly generous pro-ration factors will get corrected very soon. The second one is that the expectations and behavior of other people who bought the same plan as you would affect how much premiums you pay or what benefits you're going to get in future. So if you have an IP rider, you may want to observe how people around you who also have the IP rider use their plan. This will give you a hint of where your rider premiums are heading. I used to own riders, but decided to drop them after I see how people around me use their riders. So Jen, if you knew about this hard truth when you bought your IP plans, would you have done something differently?
Personally, for me, I actually never bought a rider. But now I am told that I should have a rider because of the cancer drug list. And riders have a multiplier factor on the coverage.
Yep.
So I don't know.
So it really boils down on your perception or your expectation of other policyholders who have bought the riders.
Yes.
And then you should act accordingly.
Still to come, how does pro-ration help make your Shield plan more sustainable? And the bottom line, will your IP premium go up? That's after the break.
Money Hacks by the Business Times delivers useful financial tips every Monday. Subscribe to the playlists in Spotify, Apple Podcasts, or wherever you listen to podcasts. But if watching is your thing, we've got you covered. Subscribe to the Money Hacks playlist in the podcast tab of BT's YouTube channel and watch as Howie Lim gets the inside scoop on the best money hacks. Subscribe and watch today.
And now, back to WealthBT, a podcast of BT correspondents.
Welcome back. Alex, let's look at premiums. What's the likely impact on IP premiums with all these proration adjustments?
I think when people consume healthcare and they know that, my bills are being settled by the insurers, they would just try to focus on getting well soon instead of looking at the size of the bill. On the provider side, be it the hospitals or the pharmaceutical companies who are selling the medicines, they would feel that, if you feel that you can afford, I should be able to charge you more because you are probably not going to complain. And if everyone stopped taking interest in how the central risk pool of money is being consumed, then naturally would end up with the premium spiraling out of control.
You've mentioned earlier about people may not understand the insurer has the right to change or modify terms and conditions. So what do you think is a fair way to do this? Because for many policyholders, they actually feel that the goalposts of the plan keeps changing.
Well, I guess it boils down to how you view your relationship with the IP insurers. I think many of us look at IP insurers as, okay, we pay a premium, we purchase a service, so we expect to get some benefits back as how we would usually treat our telco or F&B outlets. With that frame, of course, when you're being charged higher and higher in premium, getting less and less benefits, it would feel frustrating. But the essence of insurance is not really about that. The IP insurer's role is there to facilitate the pooling of resources from the different policyholders who would have been financially ruined if they experience a sudden large medical bill. So ultimately, how much payout can be made out of that pool depends on how much we can afford collectively to put into that pool. And allow me to give an unpopular example. As human beings, when we ourselves are the patients, we would feel that we deserve the best treatment and in the best setting. But how many of us actually check out how much our desired treatment costs? Can we really afford it? And will you still be able to afford it if you were to be asked to pay that out of pocket or take a loan? If the answer is no, then chances are you have consumed some treatment that is beyond your means. And if everyone start consuming care that is beyond their means from the pool, eventually everyone that is part of that pool will have to either pay more, so there's enough money to get the pool going, or whoever that comes later would get less benefit. And at some point, the required contribution will become so high that some people will be forced to drop off. And I think that's what's happening to IP right now. In a sense, it sounds a bit like the climate change problem. Tragedy of the commons.
Actually, there is another factor as well in the whole mix, which is the provider of the healthcare, the clinics. And sometimes they pre-select you because they know that you're covered. So this kind of overconsumption is encouraged.
Yeah, in a sense, we can look across the border a bit to see the situation. Malaysia is also grappling with this rising health insurance premium problem. Last December, a news report says that Bank Negara observed that hospitals are billing patients who have letter of guarantee and therefore the cashless experience slightly more than double than what they would have billed a patient who is paying out of pocket first and claiming later.
Right.
And they have also found instances where the bill contains items that were actually not consumed. I don't know to what extent this situation is pervasive in Singapore, but you can imagine if it does happen, it's quite impossible for the insurance company to screen out this kind of excesses without the help of the customers. Honestly, one of the problems that people think about their relationship with the insurer is a win-lose relationship, and they think that all these premium loadings, declining of claims and exclusions are because the insurers are out there to profit from me. But I don't think that is the case for Singapore. Let me use another example. SAS, we published a paper last November, and we found that over the past 10 years, the IP insurers are actually just running 2% profit margin. That's up to 2023. 78% of the IP premiums are being used to pay claims. 12% went to the remuneration of the sales force. 8% went to paying the salaries of the insurance company, pay for rent, pay for systems, and only 2% went to the shareholders as profits. So the insurers are not making excessive profit out of this. In contrast, you would have hospital groups and pharmaceutical companies running a 10% profit margin.
What do you think people should do to kind of mitigate this potential disappointment or a big bill shock?
Well, in an ideal world, education should work. So there are two things to educate the customers about. First is educate people to take an interest in how the money in that risk pool is being spent. And if they don't like what they see, they should take action and demand change. The other thing to educate the people would be to ask people to tap onto the risk pool in a responsible manner. Just now I talked about the Malaysian situation. If everyone stopped caring about how your service provider, the hospitals or the pharmaceutical companies are billing you, then naturally you can't expect the premium increase to be controlled. So I would think that the more pragmatic approach would be accept that premiums and benefits for your IP plans would get continuously adjusted based on how other people that are in the same plan as you behaves. And depending on your perception of how your fellow policyholders would behave, pick the IP plan that you think you can really afford in the long run. Be prepared to adjust your expectations, and you may need to self-insure more.
That's a lot to think about. Thank you for joining us, Alex.
Thanks for having me.
I hope this episode clarifies some of the changes in the pipeline for MediShield Life and IPs this year. There are many more changes in MediShield Life that I hope you can get familiar with, like changes in the claim limits and even the inclusion of cell, tissue, and gene therapies for the first time. Healthcare costs are always a big concern, and insurance helps to cushion the risk of a very large bill. With all the new developments, it always helps to be aware and understand what's happening, and to get proper advice on what we can claim even before we get admitted for treatment. BT Correspondence will be back next week with a new episode on transport, so do check it out. If you have any thoughts or questions about the show, email us at btpodcasts@sph.com.sg. I'm Genevieve Cua. As always, thank you for listening.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.